So I wanted to start by thanking the many people I've worked with on these ideas for a long time, but especially two people. One is Dan Suarez, who I think some of you in here might know. I've done some research with him recently, Patrick Bigger as well, and then longer-term collaborations with Juanita Sundberg and Rosemary Collard, who I think some of you might also know. So I just wanted to start by saying that a lot of what I'm going to present today really is a collective project, and so I just wanted to be sure to acknowledge that. Okay, so to start, I'm going to bring you here to where I was about 2 months ago, on the 21st of January. I was in the offices of Credit Suisse, Midtown Manhattan. I was attending a conservation finance event. Conference like the one that most of us are, I think, pretty sure, are pretty used to, but way nicer suits, way nicer. A lot better snacks as well in the break period. And in general, shorter, easier to understand, punchier presentations, including a lot of elevator pitches that I got at lunchtime by people who were starting up really interesting, sort of conservation-y style projects, and were looking for investors, and I had to say, like, sorry, I don't have any money for you. And so the meeting at Credit Suisse, this conference was really meant to expose investors to the field of conservation finance, to promote discussion and conversation on making conservation finance investable, scalable, and repeatable. That was really the mantra of the event. The final speaker was this guy here, Wilson Irvin. He's the vice chairman at Credit Suisse. It was a big deal that he closed the conference. He used to be the chief risk officer during the 2009 crash, and he closed the event with a joke. And so I'm going to paraphrase the joke for you here. So this is him speaking here. I got pretty good notes from it. Economists have a joke, he says. It's not a very good joke. They call it the dismal science, and that's partly because of their humor. Two economists are walking down the street. One says, hey, look, there's a $20 bill lying over there. The other one says, it can't be. Someone would have picked it up already. This is where people who are really nerdy and economists would laugh, but it's okay, because you're not those people necessarily. The securities market actually works, this is him. The security market actually works every day, picking up every nickel and dime and penny, eliminating inefficiencies. But in environmental markets, he says, in conservation markets, there are $20,000, $100,000 bills on the ground, but they're heavy. Some of them seem glued to the ground. They require a ton of work to actually lift them up and to help drive positive change. You guys are the people trying to do that, and that's why this is called a practitioners conference. I'm channeling my Wilson Irvin. You are the people trying to lift those bills off the pavement and get things done. So it's clearly a good thing he said it was not a good joke, but it is a rich, really rich vignette, and I'm going to work it sort of for all it's worth in this talk. The joke teller that he's referring to is saying that the global economy is currently inefficient, right? There are all these dollar bills all over the ground. There's these huge opportunities to kind of tighten the market up, to produce capitalist value, profit, but also solve some huge problems of the degradation of nature. And so Irvin's joke reflects in many ways a kind of standard economic picturing of environmental problems. Economic processes today have externalities. They have unintended effects. But these externalities are also opportunities because they represent inefficiencies in the system and that the market is best at correcting, if we can set up the conditions for it to do its work. This kind of understanding of biodiversity loss is one that's formulated, at least in part, at the Bezier Institute of Ecological Economics. How many people are familiar with that? Okay, so some of you are. Cool. This is quite a famed place in the world of ecosystem service science. In the early 1990s, the Institute, when it kind of reformulated itself under this rubric of ecological economics, its first project it undertook was to understand the problem of biodiversity loss through an economic lens. It created this kind of subdiscipline, the economics of biodiversity. It brought together most important task of our generation, next to avoiding nuclear war. This was the characterization by Robert Costanza and Tony Wood. That was in the late 80s. So over a couple of years, this Bezier project on biodiversity, and I have a entire chapter of my forthcoming book on it, they produced several books, editions of journals, and they cemented a kind of consensus among scholars who used to be battling. So here I'm referring to, I don't know how many people have read Paul Ehrlich's Extinction. Lately it's not, probably on everyone's readings list these days. But if you read that book, I mean, he is angry at economists. Economists are like the devil. They're evil. And so this project really brought together, previously battling academics. And the problem, they conclude, is that there's a giant market failure. There's a non-equilibrium state where the market value of biodiversity loss does not measure the change in the social welfare of that loss. And at the root of this are the independent decisions of billions of consumers, which are themselves privately rational, but collectively suicidal. There's a socialization of costs and a privatization of gains, right? This is a classic kind of picturing of the problem that we have with economics. But this is, of course, not the only way. Oh, I meant to put a picture of her up here. I forgot. Okay. So feminist political economists, ecofeminists like Maria Mies, also draw our attention to the massive social costs of economic processes. Mies draws attention to how value production, and by value production I mean capitalist value production, profit here, the kind of end time in the Marxist that value production sits not only upon the exploitation of wage laborers here, right, but also the unpriced, largely invisible work of all that sits below the waterline on this iceberg. The unpriced, largely invisible work of peasants, household labor, and most foundationally, the work of nature. And this is from Maria Mies' writing in this great book that I highly recommend reading, Patriarchy and Accumulation in the World Today. I like classic and other interesting books. Okay. Jason Moore, most recently, if you want to be a bit more up to date, his book just came out in Verso last year. It's called Capitalism and the Web of Life. It also draws our attention to the enormous amount of work that non-humans contribute to the production of value, of creation of capital, money capital, and the importance of what he calls cheap natures, both human and non-human. So Moore refuses to talk in the term of impact, but rather wants us to think about how capitalist economic processes organize nature in ways that allow profit to be extracted. And a crucial characteristic, he says, of the capitalist way of organizing nature is that it requires cheap nature. So for Moore and Mies, then, these invisible labors, these socialized costs, are not simply a bad side effect of economic processes, but rather should be seen as integral to the production of capitalist value. Value, this is a quote of Moore's, value is not created unless some work is not valued. In other words, they draw attention to the way that capitalist economic processes require bodies, humans and non-humans, to be kind of located in positions of exploitation in these kind of varying degrees of cheapness. All right. So that's sort of, I see a bit of a slight regression from the Bezier Institute, but I want to sort of stick these two together a little bit. The Bezier and the kind of project of what I call enterprising nature, they also aim to kind of end cheap nature, to end socialized costs, or at least reduce them, to make nature visible, to make the economy more efficient. To do so here I'm back with the Bezier. Here. To do so requires the right representation, the right measures. Okay, this is the argument of kind of like a neoclassical approach to biodiversity. As Timothy Mitchell argues, this is the kind of classic move of economists in that it diagnoses defects and problems as resulting from, quote, an absence of representation. Things are stuck outside of the market or in an inefficient state, quote, because they are not properly represented by, say, property records, prices, or other systems of record. This is Tim Mitchell sort of talking about how economists kind of see the world, right? That they lack these proper systems of representation, prices, models, laws, and policies that are needed to make nature visible and governable through an economic logic. So for example, Charles Herring, he rings the bell sort of over and over again throughout the sort of outputs of this project in the early 90s. He says, the needed set of measures are those that can, quote, establish the economic value of a change in the level of ecological services associated with a change in the level of biodiversity. In other words, he's saying we need these measures, a way of representing how these changes in ecosystem services occur given and their relationship to a change in species distribution, richness, or abundance. This is, as Kai can talk about this probably forever, this is like a debate that's gone on for a long time. But my point here is just to draw attention to that this is like an approach to understanding the problem of biodiversity loss. Okay, so now I'm going to say a little bit about my book, and then I will get into my forthcoming book, that I am just finishing the piece for right now, it's almost done, traces the drive to produce a nature that can prove its worth in economic terms. Okay, so my book is really about this attempt to create these representations that can allow nature to compete in the marketplace and in the cost-benefit accounting of modern government. Okay, and enterprising nature. So importantly, I want to note this book does not just study market making. It's interested much more in the promise of enterprising, demonstrated well by this image here at the bottom. This image is from 2005 edition of The Economist. There's an article on administration and distribution that I think I read in Kai's class, so thank you for that. Okay, not myself. And this image, to me, demonstrates really well what is on promise, what is on offer in enterprising nature. It shows somewhat sharp-looking, jolly, middle-aged accountants behind a desk, doling out money to an orderly line of half-human, half-animal, half-plant creatures which appear as capitalists, half-bored laborers, although they're very eager to receive fair pay. The image reveals this promise of enterprising nature, a promise of orderly, efficient socio-ecological relations mediated through a monetary transaction. These creatures are enterprising. They're not receiving handouts. They're receiving a due payment for work performed. And the book really studies what holds this promise up, the disciplinary apparatuses, the models that produce ecological economic value needed in institutional and political alignment. But this is the key take home of the book, is that the story of enterprising nature, as I describe it, is not one of triumphant ascent, as we might expect, but rather one of enormous challenges, technical, scientific, political. In many ways, this man behind the desk on the cover of the book should be sweating profusely. He should be backed up by experts and held up by institutions, academic, NGO, international. The amount of money in the bag should be underpinned by practice governments and firms, but also computer models, and below that, abstract ecological economic models. The process is not at all seamless as this image might indicate. Okay. So today, what I want to do for the rest of our time here together, and I am going to come back to the iceberg and the Bezier stuff in the end, never fear. I'm going to talk about my latest project, which is interested in understanding the extent to which private, profit-seeking capital is flowing to conservation, to understand the scale, scope, and character of international return-generating, for-profit biodiversity conservation. And the research really has two prongs and approaches, and I'm happy to talk about it in the questions. There's one is really a project of scoping the field overall and historicizing it, which is what I'm going to talk about today mostly. And the second is that I'm going to be digging down into some new economic models, particularly financial private equity funds that are emerging. I'll get into that in a bit, though. And I'm doing this project, and the way I want to think about it here in this talk is that I think that this is actually one way, and it's certainly not the only way, that we could study how enterprising nature as a kind of strategy, let's say, as an approach to thinking about the problem of ecological degradation and biodiversity loss. It's a way that we can sort of study how well it's working in a way, how well it's created the conditions for money capital to actually flow to these unpriced, undervalued work of nature, right? So here I'm trying to, my book was much more about the kind of creation of the scientific, the kind of policy debates that happened around enterprising nature. This project right now, I just want to know, is the money flowing, right? And I want to better understand what that looks like. And so today I'm going to present 3 promises of conservation capital. And I'm going to suggest that we understand for-profit conservation as a 30-year, mostly promissory discourse. And so to do that, I am going to go back about 30 years. So this is the first promise. So I'm going to just go through 3 promises, and then I'll conclude. So that's the rest of the talk. And when I conclude, I'll go back to the iceberg-Bezier kind of tension. Promise 1, Jean Gould. So the promise of an economically rational biodiversity conservation was really widespread during the beginnings of the Biodiversity Convention in the late 80s and early 90s. These are some pretty key texts. This one here on your left is one produced by some real old hats in global biodiversity conservation. You've got Jeff McNeely, Walt Reed, Russell Mittermeier. And this was produced in 1990. So this was like a key text that sort of led to was really important to the negotiations of the Biodiversity Convention. And in it, you find that the need to create economic incentives for conservation are everywhere. So I find this, when I found it, and this is probably obvious maybe to some of you in this room, but when I was doing my research, I found the extent to which arguments around economic approaches to conservation, the extent to which they were present in these very kind of origin moments was something I wasn't sort of aware of. And most of the conversation at this point really oriented around the value of genetic resources, hence the Jean Gould promise. And so the 1990 document, this one here on the left, is tons of conversation about the promise of bioprospecting and that genetic resources could play in incentivizing countries in the South to conserve their forests as opposed to cutting them down. And the document, the 1990 document, reflects in many ways the enthusiasm found in the 1987 Brundtland Report, which saw that genetic resources of the tropics as an almost unlimited source of wealth. It's really striking to read it now. It predicted that the economic value in genetic resources alone is, quote, enough to justify species preservation, meaning the incentive to sell the genetic information in tropical forests would outweigh the value of other opportunities in, say, timber or land for agriculture. So we know now, and this is probably not something new to you all here, but bioprospecting really failed to deliver on this promise. A 2010 assessment found that only $50 million flows from bioprospecting into conservation. Okay, promise 2, ecosystem, forest, carbon, what I'm calling green carbon golds here. So carbon sequestration services of tropical forests were also discussed very much in the late 80s and early 90s with the beginnings of the CBD, although it wasn't sort of brought into the final text of the CBD. It was a crucial argument for increased action on tropical deforestation. Alignments between climate action and biodiversity were viewed as a critical source of bringing money into conservation to create solid revenue sources for this invisible services of nature. The peak of this promise probably had to be the 2009 Eliash Review. Does anyone remember this? It was so huge. It was like leading up to Copenhagen. Everyone thought Copenhagen was going to be this moment, right, around climate change. In 2009, this review was conducted by the UK. It focused on the scale of finance and the mechanisms needed to reduce forest carbon emissions. It suggested that including avoided deforestation in a carbon trading system could provide the finance to reduce deforestation up to 75% by 2030. And it said that it predicted that if this was the case, we would generate $7 billion in avoided deforestation by 2020. So, okay, We know also in this moment right now, the forest carbon market faces a problem of massively oversupplied credits and low prices. There's basically no source of demand. This is just a report. It's a good one to check out by Global Canopy Project and a bunch of others that talks about this kind of disjuncture between supply of credits and the lack of demand. The global forest carbon market transacted like around $200 million in 2011 and just under that in 2013. These are amounts that sound big, but actually just for scale is about the size of one single Walmart's revenue in a year. And so it seems in some ways we hit peak forest carbon market before we hit anything close to peak oil. Okay, so what I want to do here is use the voice of Andrew Mitchell, who I interviewed very recently. He's a relentless advocate to kind of make the forest worth more alive than dead, and he summarizes where we're at today. He says about the forest carbon market, there are companies like Wildlife Works who are doing excellent work, and they're finding it very difficult to sell their product into the market because the market is so dismal. And all the big companies set up carbon desks and forest desks like JP Morgan. They've all been disbanded. All their teams of expertise thrown out, cast out of jobs. He's got an English accent, so you can imagine he sounds really dramatic. In the last few years, because there's no carbon market. And so what happened is there's been a shift away from red and carbon. He goes on to say the shift has been towards greening supply chains and cleaning them up. So what you've got is large amounts of capital, this is him still, now being employed by big companies like Unilever, Cargill, who recognize they need to clean up their supply chains, and they're putting a lot of money in it, and it's creating a much more viable platform on which conservation success and investments can be built. So this is what he says. So here he is sort of explaining, you know, look, the carbon moment has passed. The forest carbon moment has passed, in his view. Why is this kind of greening supply chain more viable? So I also wanted to draw out more of his quote because I think he's more clear than I can be. Well, number one, he says, so this is this shift in focus away from red towards supply chains. You're dealing with real money, real products, not invented ones like carbon. So these commodities have huge numbers associated with them. They're providing a product everyone wants, which is something like food, for example. And then he says, and they don't need new laws to figure out how to do it. There's already a thriving market. Mitchell, I've done a lot of the research I've been doing lately is on all of these businesses that failed around the forest carbon market, and Andrew Mitchell actually lost his own money in a business that he started called Canopy Capital. And so he had a lot to say about just how difficult it was to make a go out of a project that they tried to do in Guyana, especially. So he has a lot of experience in this, and he talked a lot about just how difficult the sort of legal environment was, not only in Guyana, but more broadly around trying to sort of create these commodities, right, in forest carbon. Okay, so Mitchell sets up promise number 3 very nicely, which is where I'm going to end with the promises today. I didn't know exactly how to call it. I wanted to keep going with the gold. I had the impact investing pot of gold, but it seemed too cute. Anyway, but this is where we're at today, and this is where a lot of my research is happening right now. These new promises of conservation capital are emerging under this label of impact investing, investments that measure more than simply financial return. Impact investing is actually a term that was created by the Rockefeller Foundation. There's a whole history in there. I'm happy to talk about like what's going on there, and foundations are very integral in this space, actually. And this was a lot of the gang that was assembled in that conference that I explained at the beginning of this of the talk at the offices of Credit Suisse. And so this promise is that, these are some of the reports that have come out, you know, some pretty big players involved, like JP Morgan Chase, and the Conservation Finance Report, the other one is Credit Suisse. The promise here is that we could generate all the funding we need to literally save nature if the main investor segments allocated only 1% of their new and reinvested capital to conservation. And the emphasis is especially in this area on high net worth and what's called ultra high net worth investors in particular. Okay, so they're all saying, like, look, if these people who have a lot of money, and even a few institutional investors, if they could just give us a sliver, we could really, you know, do a lot here. That's the promise. So with Patrick Bigger predominantly, I'm studying new private equity funds that are doing return-oriented conservation, and these are some of the names of the funds, although these are certainly not all of them. Take, for example, we're studying them to understand their model, all the way from the investment side, so we want to know like who the investors are, we want to understand the financial vehicle itself, which we're still doing, and then we're also going to look at some of their projects on the ground, which we're doing this summer. So take, for example, Athelia Ecosphere, which is really the darling of the conservation finance world. It's I just have a picture there, it's this logo. It's 105 million euro closed-end fund. It was launched in 2011. It will mature in 10 years later. It invests in predominantly agroforestry, sustainable land use, and claims that its returns are market rate. Its investors so far are pretty much foundations and quasi-public institutions. These financial funds, most of them, all of them here, are really focusing much more on creating traditional commodity production, like food and forest products, and doing those sustainably. So this is this kind of greening supply chain sort of approach. And carbon and other ecosystem credits are kind of like the cherry on the top of them. They're not considered to be like a main source of revenue, although there are some projects that do play in the voluntary forest carbon market. Okay. I want to also just say, just on Athelia, just sticking with them as an example, one of the things that makes Athelia go is that they are backed by a USAID guarantee, USAID, so the development institution of the US government, which halves the financial risk associated with the project. This is a classic kind of example of the collectivization, you could say, of private venture risk. And this is very common in the sector. You have a lot of philanthropic and public capital sort of shoring up first losses. There's really interesting stuff going on. It's super interesting and fun to be in this area. I enjoy very much talking to a lot of the principals. They're very open about the challenges, and I'm excited to go down and see what some of these projects look like on the ground. Profit and power structures in the global political economy depend deeply on these externalizations. And efforts to alter externalizations mean confronting these very formidable forces, confronting some of the world's most powerful companies and the governments who are so tied to the resource rents from them. And so convincing decision makers to internalize the full costs of goods and services, to eliminate cheap natures, is kind of like trying to get a Goldman Sachs executive to give up his extremely high bonus, and he is necessary there. It's very, very difficult. So what I'm suggesting is that attempts to create enterprising nature as this most kind of like business as usual approach to solving this distinction, let's say, are in part foiled by economic self-interest and by concentrations of wealth and power. This is kind of a very paradoxical situation. So attempts to enterprise are not simply ramming up against irrational, stupid, unecological people or decision makers who just simply lack these representations, but are ramming up against an economic accumulative system, a logic that, to go back to Mies and Moore, depends upon cheap nature. Again, Moore, value is not created unless most work is not valued. So this logic really depends upon these devaluations of certain bodies, human and non. With such a view, it makes really perfect sense that enterprising nature as an approach, as a strategy, exists as both hegemonic and dominant, and one destined to continue as little more than briefly illuminating fireflies, that is, kind of short, quick bursts of light in the dark night. That last little metaphor was actually an interview that I did in my dissertation in 2009. That's how this was an investment banker, that's actually how she described what was going on, or what she was seeing around kind of wetland banking and forest carbon and all that. She was like, fireflies. Okay, to take this further, we might even suggest that enterprising nature rams up against what so many critical scholars have been saying for a very long time. That is, it runs up against epistemological, political, and economic systems of thought and practice, a civilization, perhaps, that's organized around a collective understanding of nature as external, a civilization whose representations, rationalities, and investigations and logics really deny human dependence on nature. And here I'm thinking about the amazing work of Carolyn Merchant, Val Plumwood, Clive Hamilton more recently, Jason Moore, Maria Mies, all of these folks have really wanted us to grapple with it. So in challenging this kind of externalization, and by that I mean like this it's like civilizational externalization of nature, which is what I think actually enterprising nature is picking away at in some ways, they simultaneously reflect status quo economistic logic, but are also really threatening the foundational characteristics of contemporary capitalist social relations, and perhaps even these civilizational norms. So we might even think of enterprising nature as perhaps too radical of a project, kind of too challenging to be widely adopted. The end of cheap nature? Yes, please, but I guess the question we're left with is what kind of politics might actually realize such a thing. Done. Thank you.